If you're looking to get started on your investment journey, but you often feel overwhelmed or even discouraged by the large amounts of money that you see in other videos, $10,000 or $100,000, then this video is for you. I'll explain in very simple language how you can invest your first $1,000, £1,000, or €1,000. Before we get started, please note that I am not a financial advisor and this video is for educational purposes only. Now let's get into it. Without wasting your time, I'll let you know right now that if you're a beginner, I recommend something called ETFs, which is short for exchange traded funds. Now, I know these are big words, but hold on, I'll explain. Don't get scared. So like I already said, ETF is short for exchange traded funds. What does this mean? I want you to think about it like a collection, a fund, or like a pool that tracks a specific index. I'll explain what index means in a bit. Think about an ETF like a basket that holds investments. All right, so now what is an index? An index is a way to measure how a group of pre-selected investments, example stocks, are doing. So think about it like a shopping list or even a scoreboard for the stock market where the performance of different companies is recorded. For example, there's an index called the S&P 500. You might have heard of it. What it does is it tracks the top 500 companies listed on the US stock market. So putting this all together, let's think about an ETF this way. Think about it like a prepackaged basket of investments that you can buy and sell on the stock market. Think about the stock market in this case like the grocery store. So where would you find these ETFs? Let's introduce something called a brokerage. So think about a brokerage like the door and the checkout counter at a grocery store. What does the door do? It allows you access into the store. What does the checkout counter do? It allows you to pay for your groceries. That's basically what a brokerage is. It's a place that you go to where you can have access to the stock market and also purchase or pay for the things that you buy from the stock market or on the stock market. In the US, the most popular and largest brokerages are Fidelity, Vanguard, and Charles Schwab. Robinhood is also a pretty popular brokerage. Now that you hopefully understand the jargon of index, funds, ETFs, let's go on to explain why ETFs are perfect for beginners. The first is that ETFs typically would track the largest or the best performing companies. Now, this is amazing because when you're starting out on your investment journey, you probably don't have enough knowledge about individual companies and the performance of their stocks. So you don't have to sit and try to pick the stocks from these individual companies. The experts have already done it for you. They've prepared a pre-packaged basket of investments of the best, biggest, top performing companies. You just need to grab your basket and go check out. Second benefit that an ETF gives beginners is it exposes you to a diversified portfolio. And this is a good thing, not a bad thing. Let me explain. So ETFs will typically track companies in different industries. For example, the Vanguard S&P 500 ETF, also known as VOO, tracks companies in different industries such as technology, financial services, communication, healthcare, energy, real estate, amongst others. Now, why is this good for you as a beginner? Because you have such a diversified portfolio, you're also going to have reduced risk thanks to this diversification. So if something goes wrong with one company or an entire sector or industry, you're not going to be completely affected because your investment tracks companies in different sectors or industries. The next amazing benefit of ETFs is they're pretty easy to buy and sell. So typically once you choose a brokerage of your choice and create an account, you can buy and sell ETFs pretty easily. Going off of that, you're also able to invest smaller amounts of money. So you have $1,000. Yes, you can invest in ETFs. Do you have just $100? Yes, you can invest in ETFs. So even if a prepackaged basket, in this case, our ETF costs maybe $600, you don't have to buy the entire thing. You can buy a fraction of that. So if you only have $200, you can buy $200 worth of it. If you only have $300, you can buy $300 worth of it. So it's very easy to invest in and you can invest relatively low amounts. So even if you have $100, it's not too small to start with. Let's talk about the steady returns. So over the last 20 years, the S&P 500, which as you remember is the index that tracks the top 500 performing companies listed on the stock market, has returned about 10 to 20%. I'll say that again, over the last 20 years, the S&P 500 has returned about 10 to 20%. So what this means in simple numbers is, if you had only $1,000 to invest in the S&P 500, you put in $1,000 with a 10% return rate. In 1 year, your $1,000 is going to become $1,100 because you'd have made 10% interest on your $1,000. And this scenario applies if you only put in the $1,000 and you never put anything else in there during the duration of the 1 year. Let's zoom out, and instead of 1 year time, let's look at 10 years. What happens to your $1,000 in 10 years time if the S&P 500 continues to return a conservative 10%? In 10 years time, your initial investment of $1,000 is going to become $2,700. So you would have gained $1,700 in interest on your initial investment. If you're thinking, oh my gosh, just $1,700 in 10 years, that doesn't sound too great. Remember that this is 10 years time, and we're thinking about a scenario where you literally put the initial 1,000 and never topped it up. Now let's look at a different scenario. You start with your initial investment of $1,000, right? But then over the course of the next 10 years, every month you invest an additional $100. In 10 years' time, your investment is going to be worth around $23,000. Of course, because you've been contributing month to month, your total investment would not be just $1,000. Your total investment would be about $13,000. But in the same time duration, you'd have made an extra $10,000 on your $13,000 investment. Amazing. So if there's one thing I want you to take away from this video, it's this. ETFs make investing easy for beginners by allowing you to buy a ready-made, low-cost, diversified basket of investments. If you've watched us to this point and you're liking this video, please hit that like button. It really helps the channel out. Let's discuss very quickly why buying individual stocks when you're starting out is probably not the best idea. I already touched on this briefly, but when you're starting out, you just don't have enough information, enough knowledge, enough expertise to be able to accurately pick individual stocks for different companies. Now, let's think about the emotional side of it as well. When you're starting out, if you only have $500, $1,000, you're probably starting out from a place of very low risk appetite. So what this means is, your money is very precious to you. You want to put it in something that is relatively safe, and ETFs are good for that. You want to minimize your risk as much as possible when you're starting out on your investment journey. Of course, the more comfortable you get by practicing more and more, the higher risk you can take. And it's also a very similar reason why when you start out, you probably don't want to start out investing in very volatile asset class like cryptocurrency. Cryptocurrencies are very volatile. Your money can literally be here today, gone tomorrow, depending on what currencies you invest in. So again, when you're starting out, your money is very precious to you. At any point, your money is very precious to you, but you don't want to be discouraged by having a bad experience when you start out. So please stay away from the riskier asset classes. I'd also like to touch on something, since I said that with cryptocurrencies, your money can be here today, gone tomorrow. Now, if you're wondering, can't the same thing happen with ETFs? No, not really. So you would lose the money that you invest in an ETF if, one, there is an economic downturn. And guess what? Economic downturns don't just happen overnight. There will be signs. You will hear it on the news. You would see the value of your investments going down, and then you'd make an informed decision. You literally wouldn't go to bed one day and then wake up the next day and all your money is gone. So here's my advice to you if you're starting out on your investment journey. Go find an ETF of your choice, put your money in, and forget about it unless you plan to contribute to it monthly. When I say forget about it, what I mean is, don't look at it obsessively day in, day out. Don't worry about what happens on a day-to-day basis. It goes up, it goes down because the economy goes up and down and up and down. Think about the long term. If you zoom out, if you think about the 5-year or 10-year mark, the stock market, the S&P 500, has always trended in an upwards direction. So even if there are small blips day in, day out, or during the week or during the month, or even in the course of a year, chances are overall you're still going to be trending in an upward direction. So don't bother too much with what is happening every day. And if your $1,000 becomes like 950 tomorrow, don't worry about it. It goes up, it goes down. I want you to have a more long-term mindset. Before we go, here are 2 ETFs that I recommend that you look into. Do your own research, please. This is not financial advice. One I've already mentioned is the Vanguard S&P 500 VOO. This tracks the top performing 500 companies in the US stock market. And the other one is VTI, the Vanguard Total Index. So this tracks all the companies listed in the US stock market. So you have on one hand, one that tracks the best performing, and then on the other hand, one that tracks all the companies. These are 2 ETFs that you can start doing your research on. So let's tie everything nicely together in a bow. Here's a step-by-step process on how to invest your first $100 or your first $1,000. 1, go on the App Store or on the website of your preferred broker. This could be Robinhood, Vanguard, Fidelity, or Charles Schwab. Once you're there, open up an individual taxable brokerage account. Verify your details, link your bank account, do all of that. And then just search for the ETF of your choice. So you can search for VO, VTI, or any other ETF of your preference. Now you can decide, do you want to invest all $100 or all $1,000 in one ETF or spread it across 2 or 3? It's up to you. Whatever you decide, just do the investment, buy the ETF, and ta-da! Congratulations! You'd have invested your first $100 or your first $1,000. And when that is all done, please do a little happy dance, celebrate, be proud of yourself, because you've just taken a very crucial step in your financial journey and in your investment journey. If you found any sort of value in this video, please like it, leave me a comment telling me what you've learned from this video, and please subscribe if you like thoughtful conversations about money, personal growth, and figuring things out in a simple way without all of the pressure. Thank you so much for watching up until this point. Take care, and I will see you in the next video.